Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
Here is what is at stake today. Intercontinental Exchange acquires a stake in OKX. This is a deal that values the crypto exchange at $25 billion. In just a moment, we speak with Haider Rafique, OKX's global managing partner.
Also, prediction markets, they have taken the world by storm. It's come, though, with some pushback over suspicious bets and legal matters. We're going to talk to a CEO who's trying to make a move into the U.S.
And crypto might be coming to your 401k. This week, the U.S. laid out its proposal that could be a big win for Wall Street giants like firms such as Blackstone and Apollo.
All that ahead on this edition of Bloomberg Crypto. First, though, let's just see where things stand over the last 8 days when it comes to Bitcoin. Down about 6%, 5.9% over the last 8 days. Still, though, trading just shy of $70,000 per token. $66,737 is what we're seeing right now. We did see a high over the last 8 days of just above $71,000 per Bitcoin. And things are actually not doing so well today, despite a risk-on relief rally for equity. Scarlett, President Trump considering an end to the Iran war, even if the Strait of Hormuz remains blocked, not giving too much relief to Bitcoin today.
All right, let's also take a look at strategy because its stock has more than halved since October. It's also taken a pause after 13 straight weeks of Bitcoin purchases. You look at SEC filings and they show that the OG Bitcoin treasury company made no purchases in the last week. And of course, what strategy chairman Michael Saylor announces each week has become a kind of barometer of sentiment for the digital asset market overall. Strategy still holds about 762,000 Bitcoin. They're worth roughly $52 billion. And the average purchasing price stands at $75,700, above Bitcoin's current trading level.
I guess, proponents would say for now, above the level. Traditional exchanges, we should note, are diving into crypto as they expand their offerings. Earlier this month, Intercontinental Exchange, ICE, acquired a stake in OKX in a deal that values the cryptocurrency exchange operator at $25 billion. I spoke with the CEO of Intercontinental Exchange about how crypto has come a long way in the mainstream business world.
We had crypto that was potentially funding terrorists, potentially funding drugs, sex trafficking. People went to jail. People have lost money. And now we've got, in the U.S. anyway, a Congress that's taking on this issue, saying we potentially are going to pass regulation. And we have regulators in the U.S. that are saying we're going to embrace taking on these markets. And so for my company, we're getting in at about the time we would normally enter a market. And we're doing it potentially with partners and on the backs of people that have created the technology that we can adopt.
That was Jeff Sprecher of Intercontinental Exchange just a few weeks ago. Joining us now is OKX Global General Manager Haider Rafique. Haider, good to have you on the program. What are you learning? What do you hope to learn from Jeff Sprecher and Intercontinental Exchange with this investment, with this partnership?
Well, I think ICE has tremendous credibility in the market. They're one of the most trusted global exchanges. So for crypto, this is a really special time because we get to converge with traditional finance and partner in ways that we can mature the industry. We can mature our systems and our governance. And I think it's a really important step in the industry today. You heard Jeff talk about a lot of the perceptual issues with crypto. And I think this convergence will hopefully, along with great policy work, solve for some of that and bring maturity to our platforms.
On the policy work, how do you enter the U.S. market without a clear regulatory roadmap?
Well, look, I think at the state level, there is still clarity. As long as you have an MTL license, you can offer spot markets and what have you. But the market structure is still ill-defined. And we think with clarity, that will become really clear. We're really looking forward to it. And I hope that other participants in the industry can agree that a bill is better than no bill, and I'm really rooting for that over the next coming weeks.
Haider, how do you anticipate this partnership working in practice? What does any kind of partnership or integration between ICE and OKX look like to you?
Over the last 10 years, OKX has been building one of the most robust trading platforms. And, we use this platform now for 24/7 crypto trading. It goes all the way from Asia markets, Southeast Asia, to Europe, Latin America, Middle East, and what have you. That on-chain infrastructure has been battle tested. Our matching engine and their ability to crawl global order books has been battle tested. Bringing that to ICE, working with them, and then helping traditional financial instruments come on chain is, I think, the product integration that we're working on, we're very excited about. Look, the reality is, if you look at the internet today, it doesn't have operating hours. If you look at the on-demand economy, it doesn't have operating hours, and investors expect the same from trading. They expect these markets to be on 24/7 and to be able to price real-world events or recalibrate their portfolios should anything happen in the world over the weekend or at night. And that's just something they cannot do with traditional brokerage platforms today.
I'm glad you bring up 24/7 trading, because that's often brought up as one of the benefits of tokenizing stocks and derivatives. Who specifically is pushing for 24/7 trading? It's not necessarily the traditional institutional investors. So I'm curious what kinds of investors, where they're based, what age group even, how often do they plan to be using it?
Look, I think a lot of the sophisticated traders on our platform are seeking these instruments. And then when you look at the younger folks, they didn't get exposed to investment markets through a 401k, like, say, for example, myself. They got exposed to investments through crypto markets. And so for them, 24/7 trading is inherently something they expect. And I think that's a demand we're looking to solve for, is when younger people look to consider equities, they're going to want them to be extremely fractionalized. They're going to want to be able to trade them anytime, anywhere. And I think that's a really important outlook we all have to pay attention to.
What happens, though, on really low volume periods, like holidays, weekends, when you just don't have the liquidity that you typically have during, 9:30 to 4 Wall Street time?
I think that's a great question. So, look, our order book is a unified global order book. For this to work, you must have liquidity at all hours. So you look at OKX, because we're licensed in more than 6 markets, we have a significant business globally. If you're looking to trade Bitcoin, Ethereum, or what have you on a Sunday, you can imagine that our platform actually has that liquidity to fill, because we've got people in Asia that are already awake and actively trading, or in other markets. And I think that's a really important dynamic to consider, that the platforms who ultimately are going to win at 24/7 trading must have a unified, globally active order book.
Haider, I got to ask you, because just over a year ago, OKX pleaded guilty to processing more than $1 trillion in transactions by U.S. customers without a license. You ended up paying $500 million in penalties, or that was the penalty. At the time, the government's argument was that you allowed people to use your platform without completing a know your customer process. So my question is, have you paid, and what have you put in place since then? And what are you doing now to monitor and detect potential suspicious activity?
Well, look, I think it was a great lesson for us. We were a young company, and we since then have matured our compliance and our control functions tremendously. We've spent hundreds of millions of dollars attracting the right staffing, putting the right systems in place. So now if you look at our work, we're pretty confident that we're detecting bad transactions, we're freezing them, and then we're reporting them on time. But one thing we have to consider is, historically, we did have a company in the United States with MTL licenses that was compliant. And these are people in the United States who used VPN and onboarded onto an app that wasn't meant to service them anyway. Look, lessons learned, we paid our fine, we've matured our systems, and we're pretty confident that going forward, we're not going to have such issues.
Now you have this new compliance in place right now. You've spent and you've invested money in this, and you can flag these potentially troubling transactions on the platform. What's the rate of those? Like, are they happening every day? What do you do when you identify and your team identifies one of those transactions? What's the process there?
When you have really strict compliance controls, it becomes an unpopular venue for the bad actors to come in and conduct their activity. So now the volumes are quite significantly small, and it's not concerning. So I think they're a very small fraction. And even if you look at our plea agreement, you'll notice that less than 0.08% of customers were the reflection of that fine. So it was a very small number in context of our overall global size of 120 million plus customers.
OKX Global General Manager, Haider Rafique. Haider, good to see you. Thanks for joining us on Bloomberg Crypto. Well, coming up, we're going to talk tokenization, opportunity, and regulation with Staci Warden, formerly of the U.S. Treasury Department, NASDAQ, JP Morgan, and Milken. And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Now for a token moment where we look at the efforts to tokenize different parts of the market. Ondo Finance has partnered with Franklin Templeton to tokenize ETFs. I spoke with Ondo Managing Director of Partnerships and Katie Wheeler about the deal yesterday. Take a listen.
These ETFs are now available to investors in APAC, in Middle East, in Latin America, and in Europe. Tokenization basically allows ETF issuers to access this whole new digitally native global audience with hundreds of millions of investors. Right now, it's just the 5 ETFs, but as a platform, we have 260 assets live today, and we intend to scale that to 1,000 assets by the end of this year.
For more on tokenization, let's bring in Staci Warden. She is CEO of Algorand Foundation. We should note as well that she was previously at the Milken Institute, where she led work on capital market development, as well as crypto and blockchain solutions. Staci, welcome to Bloomberg Crypto. Can you just explain what Algorand Foundation does and what kind of role it plays or what kind of advocacy it does when it comes to tokenization?
So Algorand is a layer 1 blockchain. We are one of the OG blockchains, and we're very focused on financial empowerment. And we have a couple of things about the technology that makes us a good blockchain for that. We have something called instant finality, which means that as soon as you hit return on your keyboard, your transaction is final and cannot be reversed. We have very high throughput. We're a very lightweight protocol. So all of these kinds of chain mechanics make us very good for tokenization and for financial services more generally, also including payments. And the role of the foundation is to make Planet Algorand the best place to do business. So we make sure that the ecosystem is vibrant. We support the very many protocols building on Algorand. We engage in partnerships around tokenization and the like.
You know, I hear you speaking, and I think of Ethereum, Solana, Cardano, Avalanche, Polygon, Stellar. How are you different than these others?
So technically, we're a bit different. So technically, we are quite decentralized, and we are quite permissionless. And so one thing practically that means is that you can participate in the security of the Algorand network with a consumer-grade laptop. You don't need enterprise-grade hardware to secure the network, which is true of more Bitcoin and Solana and Ethereum. Secondly, we have what's called a pure proof-of-stake protocol, which means that you can't be slashed if you make a mistake. You can contribute and withdraw tokens whenever you want to secure the network. So you don't have to have a minimum level. You can participate with one algo. You're not going to earn rewards very often if you do that. And so the idea is that it's really a sort of a decentralized network of the people, if you will. Anybody can secure the network. So that's the most important thing, I will say. Secondly, that speaks to permissionless and decentralization. Secondly, we're the only platform that gives you an instant finality. And this is going to be very important in finance. Imagine if you have a stablecoin, even for a millisecond, where there's the same stablecoin can be redeemed in 2 states of the world at the same time. So you can't have that happen. And we have pretty high throughput as well. These are our USPs, as they're known.
Staci, you are now classified as a digital commodity by the SEC. What does that mean for your business? What does it allow you to do that perhaps you couldn't before?
Yeah, we're doing the happy dance about that, of course, as you can imagine. And, I can go into a little bit more technical detail about why that is and why we were classified that way. But for us, it comes down to a couple of really important things. First of all, our institutions, our institutional partners, as I said, we're very focused on the financial vertical. Our institutional partners have always demanded a lot from us in terms of the instant finality and the throughput. But there's always this question on the table, right? Is the algo security? And this guidance takes that question off the table. And so this, because financial institutions don't want to be engaged in unregistered securities activities unknowingly, right? And nobody likes regulatory lack of clarity, right? So that's the first thing. The second thing that is good for us is that, and this interestingly falls out of the first thing. So this second benefit only applies to those 10 odd tokens that were declared digital commodities by the SEC and the CFTC together the other day. This, if you are a digital commodity, then staking is viewed as an administrative act, not as an investment contract. So that also gives a lot of comfort to exchanges that want to list the algo and engage in activities with the algo, because they also don't want to be unwittingly engaged in activities around unregistered securities. So it's just bedrock regulatory clarity that is so important to us.
Has this
had, of course, sorry.
Yeah, sorry. We only have about a minute left, Staci, so I want to jump in. This regulatory clarity that you've been who now are your institutional partners? Who are your customers? Who are you working with now as a result of this classification change by the SEC?
Well, it was only a couple of days, a couple of weeks ago. So I wouldn't say that we've, now onboarded a partner that we didn't have before. It's really been very much business as usual at the blockchain and at the foundation. But it does give a lot of comfort to us going forward, and comfort also to the protocols that are building on Algorand, right? We are, we have had so much activity on this chain. We're known as an OG chain for so long that I don't think in a way we were ever, and our partners were ever particularly worried about it. We did our first token emission outside of the United States. We've been very careful to avoid the US regulatory parameter, but now, we have just moved to the United States. We have turned the foundation from a nonprofit to a for-profit foundation. We have a new board. So it's like a kind of a new day for us. And this was the last piece of the foundation for us for, total world domination, and to do our part to make the US the capital of digital tokens in the world.
All right, Staci, good to speak with you. Staci Warden is CEO of Algorand. Coming up later on Bloomberg Crypto, we're going to talk prediction markets with UK-based Smarkets CEO Jason Trost, which just filed for a U.S. trading license. So lots to discuss there. This is Bloomberg Crypto.
I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are higher and the bond market is bouncing back from its biggest sell-off in more than a year, as traders bet on a Fed rate cut. Investors are also reacting to a report that President Donald Trump may be willing to end the war in Iran, even with the Strait of Hormuz largely closed. Meanwhile, investors are keeping an eye on oil markets after an Iranian drone struck a fully loaded Kuwaiti tanker off Dubai. Brent crude has surged about 50% since the Iran conflict began. Meanwhile, in corporate news, Unilever is plunging to its lowest level in 2 years after the company confirmed a roughly $45 billion deal to combine its food business with McCormick. Shares of McCormick are also tumbling, with the stock hitting its lowest level in nearly 9 years. And finally, elsewhere, CoreWeave raised $8.5 billion from a group of banks and investors to help finance an expansion of its cloud computing capacity in what the company says is the largest chip-backed debt deal of its kind. Those are your midday movers. I'm Nora Melinda.
The SEC is confronting a gap in its ranks after Margaret Meg Ryan stepped down as enforcement director less than 7 months into her job. Democrat Senator Richard Blumenthal this week sent a letter to SEC Chair Paul Atkins about her tenure and reports that crypto firms may have been given special treatment. Bloomberg Law's Ben Miller reported on this and joins us now. What specifically is Senator Blumenthal suspicious of? What is he curious about?
Reports are out that have been pointing to certain dealings with the SEC that didn't directly involve the enforcement director. One in particular that caught lawmakers' attention this week was the matter of Justin's son, who was involved with the Trump family, in his crypto dealings. But this is a report originally from Reuters, but something that lawmakers have latched onto and wanted to ask a lot of questions about regarding the way that the agency is handling certain ongoing enforcement actions, some that might have been left over from the Biden administration, that this administration has made a serious about-face when it comes to crypto enforcement, dropping a lot of Biden-era enforcement actions, but some are catching lawmakers interest in particular.
It's notable, too, because as Scarlett mentioned, it comes just a short time after Margaret Ryan stepped down as its enforcement director. That was earlier this month on March 16th. What can you tell us about the reasons for her departure and why she left after such a short tenure? Didn't even last 7 months.
Yeah, well, the reasons haven't been, confirmed or, really addressed directly by the SEC. I will say that at, the SEC Speaks conference 2 weeks ago down in Washington, D.C., we had Sam Walden, the interim director, sitting there saying, you probably didn't expect to see me here on stage. You probably expected someone, I believe he said, with a little bit longer hair, which was his allusion to, Judge Ryan leaving the post after just 6 months and change. So the reasons for it have been reported. As I said, Reuters originally reported that, there may have been some conflict between her and her higher-ups at the agency regarding the way that certain enforcement actions were handled and things that she was and wasn't privy to. But lawmakers are really asking the questions and hoping to get concrete answers from the agency itself about what happened there.
Do we have any sense of whether the SEC will be replacing Judge Ryan? I mean, is there any move afoot to do that?
Yeah, the SEC has put Sam Walden in an interim capacity in that role, but they certainly seem interested in installing a new permanent head of the enforcement division. By all accounts, she was Judge Ryan was a unconventional pick. She wasn't really from the securities enforcement world. She wasn't from a white shoe law firm, enforcing or litigating securities cases. She was a judge in the military appeals court, the Court of Appeals for the Armed Forces. So she had this legal background, but she was, by all other accounts, an outsider.
What is just, we have about a minute left, so very briefly, but what's Paul Atkins' vision for the SEC?
Paul Atkins' vision, he's laid it out in a couple of different formats, but I would say that the vision that's being spoken to here is one of quality, not quantity, when it comes to enforcement actions. Their volume of enforcement actions is way, way down, historic levels of fewer filings and lower penalty recoveries since recent years, but also to make IPOs great again has been something that he's gone on record as saying is a major goal.
Yeah, and to your point, Atkins says the enforcement division is on a course correction following the Biden administration. Thank you so much, Ben Miller of Bloomberg Law. And of course, we'll be keeping you posted on any further developments here. Tim?
Well, coming up, Iran's $8 billion crypto ecosystem gets a shock from the war. We're going to discuss this and more with Chainalysis CEO Jonathan Levin. That's coming up next on Bloomberg Crypto.
Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stenovic.
The U.S.-Israeli war on Iran has put a focus on Iran's cryptocurrency market, which citizens and authorities have turned to for storing and sending money during all the turmoil. Chainalysis reported spikes in outflows from Iranian crypto exchanges, which held roughly $8 billion in assets at the end of 2025. Joining us now for more is Jonathan Levin, CEO and co-founder of Chainalysis. Jonathan, good to have you back on the program. How would you characterize the way that you saw crypto activity on Iran exchanges change after the U.S. invasion, or excuse me, not invasion, the U.S. attack on Iran?
Yeah, so great to be here. What we have seen is that, clearly there is heightened activity of things happening on crypto exchanges within Iran. And I think what people need to know is that half of this activity is actually local Iranian citizens escaping the regime, and roughly half of that usage we think is tied to IRGC being able to buy weapons and conduct oil trade, and now think about taxing ships going through the Strait of Hormuz.
So we have some experts here at Bloomberg Intelligence, Dashyan Sharat, writing that stablecoins are a vital safe haven in this Middle East conflict, providing U.S. dollar-linked liquidity for Iran, but also for neighboring countries like Lebanon as well as Dubai. Is this problematic for the U.S. government?
I think when it comes to the tools at the U.S.'s disposal, having the intelligence behind money movement of the Iranian regime is critical. What we need to focus on as a country is making sure that all of the economic flows linked to the sustenance behind the regime is well understood, and to the extent that stablecoins are being used, there are tools at the disposal to be able to conduct sanctions activity against some of these wallets, and the US has been very active in that front. There's also opportunities to freeze and seize assets as they go beyond Iranian borders and get integrated into the global cryptocurrency ecosystem. And so the visibility that we can create from Chainalysis of showing what this economy looks like is actually critical to the intelligence picture that US and allies need to have at this moment in time.
What are some of those tools that the US and its allies actually have? Because isn't the whole point of cryptocurrency that it does flow essentially permissionless across borders and easily for transactions that, with another type of currency would have to go through intermediaries?
Yeah, so when it comes to stable coins, for example, there are multiple different ways that stable coins can be frozen, seized, or even destroyed. And what we have seen actually in the case of Iran is we have seen one of the large exchanges in Iran actually fall offline and have that cryptocurrency burn. And it's not attributed on exactly how that happened, but you can think of that as a potential policy option for the offensive cyber capabilities that the US and allies have. There's also the ability to conduct freeze orders at exchanges that are the on-ramps and off-ramps of these stablecoins. And the issuers themselves have freeze capabilities in the contracts to be able to freeze assets when they have fallen into the wrong hands. And we've seen both Tether and Circle freeze large sums of stablecoins in existence based on law enforcement orders.
I think about Dubai and how it's worked really hard to become a global crypto capital in many ways, attracting capital, attracting investors, tech providers, institutions, and building out all this infrastructure. But it's also home to sanctioned Russian and Iranian transactions. I'm curious what you are seeing at your end.
Yeah, what we have seen, and I think that this is a trend that is happening across global regulatory regimes, is that there are large amounts of businesses that are registering for licenses in different places, whether that's Dubai, whether that's Brazil, whether that's Canada or the UK. And those agencies and regulatory authorities are now in a great position to actually make sure that those businesses that are registering are legitimate businesses and that they can monitor their activity and ensure compliance with global AML standards. And that's where we have actually seen there's been a big change where regulators now have to have the tools at their fingertips to be able to oversee the market and enforce that type of compliance with global standards. And that's going to actually help clean up the industry. And Dubai and VARA and ADGM have been at the forefront of establishing those standards.
So how does AI come into that and intelligence agents, which increasingly Chainalysis is getting into, using these AI agents to help understand what's actually happening on these systems?
Yeah, what we have seen is that the scale of transactions and the complexity, as we're talking about, of the types of global threats, you need to be able to automate a lot of the analysis that happens when it comes to blockchain intelligence. And Chainalysis agents are all about pairing large language models with deterministic code that executes on Chainalysis intelligence to give law enforcement the same types of insights, but just at machine scale. And so this is where I think that the future of blockchain intelligence is where our customers, our regulatory customers, our law enforcement customers, our national security agencies are able to build agents themselves on the Chainalysis platform to access insights at an unprecedented scale to tackle these types of problems at the pace that our adversaries are moving.
Jonathan Levin, CEO and co-founder of Chainalysis, joining us this afternoon. Jonathan, good to see you. Thanks for joining us. Well, coming up next, prediction markets are seeing a boom, trading seeing a surge to $6 billion. We know, though, that not everyone is happy about this. We got many stories just emerging in the last few days showing efforts to limit the industry. We're going to talk with a prediction markets pioneer, Smarkets CEO Jason Trost, all about what he's learned from his building his business in the UK. Jason Trost is next.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are hitting session highs as the market looks to wrap up a volatile month of trading. The bond market is bouncing back from its biggest sell-off in more than a year as traders bet on a Fed rate cut. Investors are also reacting to a report that President Donald Trump may be willing to end the war in Iran, even with the Strait of Hormuz largely closed. Meanwhile, Wall Street is keeping a close eye on oil markets after an Iranian drone struck down a fully loaded Kuwaiti tanker off Dubai. Brent crude has surged about 50% since the war in Iran began. In corporate news, some M&A action. Eli Lilly is rising after the company agreed to buy sleep drug maker Contessa in a roughly $8 billion deal. Eli Lilly will pay about $38 a share for the company, with up to an additional $9 per share tied to milestone targets. That deal values the company at a roughly 70% premium to Monday's close. And finally, sticking with M&A, Biogen shares are falling for their biggest drop since 2022 after agreeing to buy Apellis Pharmaceuticals for about $5 billion, expanding its treatments in immunology and rare diseases. Those are your midday movers. I'm Nora Melinda.
Let's get to the odds. An in-depth look at the booming growth of prediction markets. Last week, we spoke with Robinhood's Johan Kerbrat. His company is one of many making the case for and expanding access to prediction markets.
I think prediction market is also a new way to invest for a lot of people, being able to invest in a particular event or in a particular situation that you could not really do necessarily with just stocks or just options or just crypto. So it's just giving a new way for people to participate in the market.
Not everyone is as excited about the growth of prediction markets. Here are 3 examples of pushback that's taking shape against the industry. Dozens of Democratic lawmakers, including Senator Elizabeth Warren, this week wrote to the CFTC, urging officials to address what they're calling illegal insider trading in prediction markets by federal employees. Now, the letter specifically mentions trades related to political events, such as the capture of Venezuela's Nicolas Maduro and the invasion of Iran.
Also, CNN reported yesterday that the U.S. prosecutors in Manhattan met with Polymarket representatives to discuss how existing laws could be applied to potential misconduct in the prediction market industry. Polymarket declined to comment to CNN on its meeting. No companies have been accused of wrongdoing.
And ESPN reports that the NFL has asked prediction market operators Polymarket and Kalshi to no longer offer trades on events that can be easily manipulated or determined in advance. So this includes bets on what announcers will say during broadcasts, the upcoming NFL draft, or which celebrities would be attending specific games. An NFL spokesperson told ESPN that the letter follows months of conversations between the NFL and CFTC.
Did you hear yesterday what Jay Powell was speaking? The
question
question that he got from
right.
one of the Harvard students.
Are you going to say good afternoon, or are you going to say something else first? And the people around me didn't understand. I said, oh, that's a prediction market.
That was really good.
Yeah.
Well, here with some inside perspective on the industry is Smarkets CEO Jason Trost. His firm is a UK prediction market exchange that was founded all the way back in 2008. Jason, good to have you on the program. Here in the U.S., prediction markets have absolutely taken the country by storm. You just need to look no further than the advertisements that we're seeing and what lawmakers are saying about Kalshi and Polymarket. How do you make a dent in the U.S. industry?
Well, it's really exciting that prediction markets, they've been around for 30, 40 years. They're not new. Like I said, prediction markets going back all the way to the Iowa election markets, which was started as an academic experiment out of the University of Iowa, have been around for decades now. What's new is the amount of money that's coming into this industry especially from the sports side of things, but also this financialization of everything is adding to the froth of the industry. And what we're really excited about is bringing a regulated approach to this industry. We think some of the competitors in the space are getting a little bit over their skis and offering some markets that they shouldn't be offering. They're quite new in this space, and we think a company like Smarkets brings a mature approach to the industry.
Who's offering what that you see as they should not be offering? Name names here.
Well, there's companies out there that are offering mention markets. For example, mention markets, I think, are in poor taste. Just because you can offer a market doesn't mean you should offer a market. That example that you gave about Jay Powell and the Harvard student asking the question, I think it is a good example of a market that you shouldn't offer because there's not much utility in it and it's not very interesting. Prediction markets have a lot of power to it. There's a lot of energy around this space, and I think it's something that people should be taking seriously, operators and regulators.
So as a prediction market operator in the UK, your mantra for all the problems and the friction that are cropping up potentially in the US is regulation, not a ban. So just compare and contrast briefly the regulatory environment in the UK versus what we have in the US.
Well, in the UK, they have something called the Gambling Commission, which regulates betting exchanges. That's the UK name for prediction markets, and it operates very similar to the way that the CFTC is regulating the space. So it's called a betting intermediary, basically a place for people to trade bets with each other. That's a regulatory framework. It's been around for 20, 30 years. It's well-trodden. They have insider trading rules. It's a criminal offense to trade on inside information. Operators take it seriously. The police take it seriously. I also want to say that I think the CFTC, even though the binary options around events is new, the CFTC has been around in various forms for over 100 years, and they have insider trading rules. And I think what is going on is people aren't familiar with this space, but there's actually a lot of rules in this space that already handle insider trading, whether it's material non-public information or easy to manipulate contracts. And I think it's just about following the rules that are already down. I don't think we need new regulation in this space. I think we just need to enforce existing regulation.
You know, it's interesting here. Polymarket and Kalshi both have relationships with Donald Trump Jr. as an advisor or investor to each or one of those companies. Regardless, they have a relationship with him. Are you in conversations with any members of the Trump family to bring them on as advisors?
I am not. No, I'm not.
Is it a disadvantage to you that the two exchanges that are getting the most attention here in the U.S. have him as an advisor or an investor and you don't?
Well, I don't want to comment on what our competitors are doing, but what I will say is I do like the new administration's approach to this. I like their leaning into the openness of prediction markets. I like Chairman Selig talked about fostering a sense of innovation. I think that's really important. So I think it's good that there's so much energy in this space because sports betting, and let's be clear, a lot of prediction market energy is around sports betting specifically. Sports betting, if you look at the way it's traditionally done, whether it's in America or around the world, it basically rips people off. People are paying at least an implied transaction fee every time you place a traditional sports bet of 10%. And if you can move sports betting into a market-driven dynamics, that's going to make it fair for everybody. And so I applaud the Trump administration for being so forward-leaning, allowing this in the CFTC arena.
All right, Smarkets CEO Jason Trost, we'll have to have you back on once you're fully in operation here in the U.S. Thank you so much. We want to just take this moment to let you know what's happening in markets. You have the S&P 500, Dow, NASDAQ just hitting session highs. They've come off a little bit here, but we're also seeing concurrent moves across other asset classes. Yields on the 2-year and the 10-year have fallen, and we've also seen oil prices plunge as well. Bitcoin, it should be worth mentioning, also peaked getting just shy of $68,000. So a little bit of risk on here, and we'll continue to keep you posted on these developments. This is Bloomberg Crypto. And just a note that we're keeping an eye here on what's going on across asset classes. Stocks did peak at session highs with the S&P gaining as much as 2.7%. It's come off those best levels along with the other major indexes. Oil at the same time has fallen, with WTI falling to a low of the session of $100. And we're also seeing Bitcoin rally. It's now up about 1.5%, currently at about $67,000. We'll keep you posted on further developments.
In the meantime, let's look at a couple stocks that have been under pressure in recent days. Shares of Coinbase and Circle, both down over the course of the past week. This is lawmakers' work on the Clarity Act. There's lingering uncertainty around Senate draft language that could restrict passive yield on stablecoin balances held on centralized platforms. That matters for Coinbase because stablecoin rewards have been an important feature for keeping customer funds on platform and driving user engagement. And that brings us to our political exchange, where we look at the intersection of crypto and policy. Bloomberg Intelligence senior government analyst Nathan Dean has been following this, and he joins us now from Washington. Nathan, has there been any movement with this when it comes to getting past this yield issue?
So not in the last week. I mean, obviously the Senate is on recess this week, but the last status that we have, which is also explaining what we're seeing in Coinbase and Circle, is that there was this agreement on stablecoin yield. Think of it paying on usage rather than balances. So compare it somewhat to a airline credit card rewards program. Now, that's obviously going to cut quite a bit into Coinbase's and Circle's relationship, but this is somewhat that's, where a situation where, you have the banks on one side and their allies on Capitol Hill saying that we're not going to support a bill unless we change what is part of the Genius Act, and you have crypto and their allies saying, no, we're going to do this. In order for the solution to come together, both sides are probably going to not get exactly what they want here. And I think the White House pressure over the next few weeks, I think, is ultimately going to get the Clarity Act passed. We're still optimistic that it can get done in the second quarter.
Who is the more powerful lobby right now on Capitol Hill? Is it the traditional finance guys or crypto?
So, crypto obviously punches above its weight in terms of lobbying influence. But I would say here is that look specifically at the Senate Banking Committee and look at who the person is that's actually announcing this agreement. It's Senator Tom Tillis of North Carolina, Bank of America. And so, obviously the Senate Banking Committee has a relationship with the banks here. And look, they've just, I think when it comes to these Republican senators, they want to come up with a solution that's fair and balanced to both. And that's why you're seeing this agreement come together from like Senator Alsobrooks in Maryland. And where I'm going with this is that neither side's going to truly get what they want. But, in the interim, the Office of the Comptroller of the Currency has a rule out there that's implementing the Genius Act. And they've gone even a little bit further restrictive than the Clarity Act negotiations. So that could be also a reason why the banks and the crypto want Congress to come together and do a deal.
Okay, like you said, a solution in the end probably means no one getting exactly what they wanted. Thank you so much. Nathan Dean, our Bloomberg Intelligence Senior Government Analyst. Meanwhile, another policy change could add more legal protections to companies offering alternative assets, including crypto, in retirement accounts. And that could open the door for big players in the space like Blackstone, like Apollo. Senator Elizabeth Warren is pushing back on the rule change, saying in a statement, as cracks emerge in the private credit market, private equity returns fall to 16-year lows, and crypto keeps tumbling, President Trump has decided now is the time to stick all of these risky assets into Americans' 401ks. Bloomberg's Lukia Giftopoulou covers asset management and has been following this story. We know that the financial industry, the all asset industry, is pushing for this. Do people want this?
By people, you mean you and me, who probably know a bit more about this than the average retirement saver. I think the consensus is the vast majority don't really know what it is. When we speak to retirement advisors, many of them say, the plan sponsors confuse private credit with crypto sometimes. Many of them don't know what it is. I mean, the more sophisticated ones obviously do, but I think there's a lot of convincing to be done before there's any actual major adoption in the space.
Well, it's obviously a good thing for the providers of these products because it opens up the potential customer base for these products. If there are more people to buy something, then potentially more people will buy them. What's the argument that they're making about why it's good for people to have these in their portfolios?
I think there are like 2 or 3 talking points. Mainly one is that private markets are growing while public markets are shrinking, so it's unfair for the average retirement, saver to just invest in public markets, and then that retirement, accounts are long-term, and so it's a good place for these assets to be. However, with what we've seen in private credit recently, it kind of becomes clear that people are not really aware of what illiquid actually means. So people will need to be very, very educated before they put a lot of money into these products.
All right, sounds like there's a lot of work to be done for the industry, for the government as well. Thank you so much, Lukia Giftopoulou, who covers the investing industry for us here. Certainly a lot to get through when you talk about crypto making its way into people's 401ks. We're looking at Bloomberg Markets Board, the U.S. dollar index currently down 0.4%. That's right near session lows, and we've seen this coordinated move across asset classes, Tim, with the S&P 500, the NASDAQ peaking. It's given back a little bit of the advance, but still holding on to its gains, and oil prices falling at the same time.
It seems like the headline that's moving this is Iran's president reiterates Iran's demand on ending the war and says it is ready to end the war, seeking guarantees. That coming according to the Islamic Republic news agency, the IRNA.
Okay, so we'll wait to tell you if there's more developments on this front, but certainly investors are looking ahead to some kind of conclusion to the conflict in the Middle East.
Yeah, oil down on that, stocks higher, but off their best
WTI
levels.
still around $100 a barrel,
Yeah,
so
I mean, that
elevated.
makes its way into the economy.
Absolutely. That's all for Bloomberg Crypto. Join us again, same time, same place next week. This is Bloomberg.